As this is a it's quite a debate in Canada. The province of Alberta, which is, Canada's Texas, and the Canadian oil and gas industry are very bullish on the future of oil. And they're calling on the Canadian government to build one, two, three pipelines so they can service, send their heavy crude oil to Asia, to Europe, and so on. They see the future as extremely bright. But this conversation that you and I are having talks about considerable uncertainty and volatility. And would you say that this is a good time for oil companies to be boosting production and getting ready for, more export opportunities and expansion?
Well, I think, the Canadian view has got to be reliance upon the United States as a stable consumer is not in the best interest of Canadians and Albertans. It's um, no, you need a diversity of consumers, and you need that whether the price is up or the price is down. We all know, of course, that the cure for a low oil price is a low oil price. The disinvestment, the lack of new investment, and OPEC Plus saying that they are not investing enough to maintain level production. That tells us that we're going to bump up against demand at some point soon. And whether it's an 80 million barrel a day market or a 75 million barrel a day market, way down from, say, 105 million barrels a day, the price can still be high. It can still be 120, $130 a barrel, depending upon what's necessary for the usage. And so, the thing to do right now is live within your means. Don't take on additional debt. If you can convince shareholders, it's a good use of shareholder funds to build pipes and do more development, infield development, not take the big risk, then go ahead and do it.
Okay.
There will be an oil patch 50 years from now.
Yes, I think we all agree. Even the International Energy Agency agrees with that.
Yeah.
There's no question about that. But throughout that comment, I was thinking, this is if I understand you correctly, you're suggesting that the CEOs will be hedging risk. They want to minimize risk as much as possible because of volatility and turbulence in the markets and not knowing where things are going. And did I read that correctly?
Absolutely. They're going to be protecting against the downside. And, 2014, 2015, 2016, the price war that OPEC unleashed, especially against U.S. shale plays, was extremely painful. And of course, it hurt the Canadian producers as well. Um, that's always the challenge. The OPEC nations understand that peak oil demand is somewhere in the future. It's closer than it was 20 years ago. They're also looking at their asset as something that if they don't get it to market today or tomorrow, they sure as hell should do it by next year. There's that sort of urgency. I'm reminded of some of the mineral owners in Montana who were lobbying to bring their vast coal fields to market and help American energy. And they were doing this about 10 years ago. And, quite honestly, they were 50 years late. So those fields are never going to get developed.
And you brought up the Saudis and OPEC, and I remember reading in the 2018 BP review, Spencer Dale, BP's chief economist. It was the first time I had seen this argument. He said, at some point, as peak oil demand approaches or we get past it a little bit, the low-cost producers, and he was thinking primarily of OPEC and particularly the Saudis, are going to make a calculation. Do we want high prices or do we want higher market share? And it would almost seem like that OPEC and the Saudis are making that calculation now. What do you think of that?
They've always made that calculation. Their economic advisor from Houston, the great firm of Groppe Long and Littell, was helping them do that math all the way through the 50, 60 years ago. And so, yeah, it's a profit maximization discussion. What do I pursue today? And right now, the Saudi interest is in expanding its market share, driving some of the less capable producers out of the market. And keep in mind, of course, the Saudis can play this game both ways, not just through the drill bit in the ground and from production, but through their sovereign wealth fund. They can invest according to how the CEO of Saudi Aramco wants to either expand production, drive the price down, or withdraw production, drive the price up. So they've got a couple of different ways to play this. Lately, and really over the last 10 years, we've seen Saudi Arabia and other OPEC nations look to integrate downstream so that they can provide the refined products or the plastics or the value add production that comes from crude oil.
Yes, and I think that's a big part of the when I look at OPEC and IEA modeling, the question is going to be to what extent does demand for oil rise because petrochemical production rises?
Right.
And not everybody has agreed on that, and but grist for another conversation. But you can certainly see the Saudis and the other OPEC nations, as you say, making that calculation and investing elsewhere other than fuel for transportation. Ed, this has been a fascinating. We're going to be revisiting this as we go forward because it looks like we're in for a period of market turbulence, and what that means for the longer term. Thank you very much for this.
My pleasure, Markham. Let's talk when somebody makes a bid for BP. That'll be next week, I think.